invest $100,000 and I spend 5 to 6 years, you get back $125,000. This return is great, but it's not as good as if you were to invest in a pre-construction. They're developing this side, and then these, I guess, are over there. There's different ways that you can invest in real estate without actually owning real estate. There's a lot of land here that's eventually going to be purchased and developed. Do not ever invest in anything unless you're prepared to lose the money that you're investing. Now, we are really in the middle of nowhere. For me, as an investor, this is sort of prime property. There's nothing worse than having money sitting in an asset. Some people may just not be able to get into the market, and if you're one of those people, you may want to consider a development deal similar to that. Real estate has always been and will always be the safest investment you can possibly buy. This is another way that you invest in real estate. When it comes to purchasing property, any real estate agent will tell you, you should have bought it yesterday. What's going on, ladies and gentlemen? Today I'm taking you for a drive. We're in Canada's version of Silicon Valley, Kitchener-Waterloo area. Waterloo has the highest density of startups and venture capital money behind Silicon Valley. I want to take you guys on a little trip to show you what a development looks like before it's even excavated. Now, if you guys don't know, Waterloo region, they have the highest density of startups in the world behind Silicon Valley. 2018, Kitchener became home to Google's largest research and development center in Canada. For me, as an investor, this is sort of prime property. Hope you guys can hear me because the wind is terrible. About 200 meters over there, you're going to find bulldozers, and they're getting ready to excavate some land. Now, what we are doing is we are walking towards a site that is planned for the next development deal that I'm considering purchasing. We are really clearly in the middle of nowhere, and this is a future site to about 252 units, I believe. It's going to consist of townhomes and condominiums. In about 4 to 6 years, this side and that side is going to be full of condominiums and townhomes. To me, as an investor, I really don't know, nor do I care, how much the property values are going to be, because this development deal is not depending on how much I have to invest and qualify for. This development is based on return on investment, ROI. So my multiple on the ROI will be 2 to 2.25. We're looking at 125% ROI in a span of 5 to 6 years. As an example, if you were to invest $100,000 in a span to 5 to 6 years, you get back $125,000. This return is great, but it's not as good as if you were to invest in a pre-construction or purchased with one other co-investor. But in my opinion, this is a lot less risky than purchasing a property. Depending on the market that you're in, depending on the location that you're in, perhaps buying a property to rent to tenants is a better deal. This market in the GTA, it's about $500,000 to $600,000 to buy a 1.5 bedroom condo. Some people may just not be able to get into the market, and if you're one of those people, you may want to consider a development deal similar to that. This is another way that you can invest in real estate without needing to qualify for financing, or if you don't have the necessary funds or down payment required to purchase a single family or a condo unit. Developer companies have a little different screening process and criteria when they qualify investors. You become a shareholder in a company that is owned by multiple people. As long as you're met the criteria for the developer, you can invest in this or other project that that developer has currently ongoing. With this particular development deal, the buy-in is $25,000, and you have to have already qualified and met the criteria of the developer to even be part of this deal. It's a little less stressful than buying a property where you have to qualify for financing and all that, because they don't answer to the similar body. They also don't want you to lose your shirt. Therefore, they're going to go through a questionnaire on the phone and in person to make sure that you're qualified as an investor, because this is a higher risk venture, and again, they don't want you to lose your shirt and then blame them. There are some good ones and there are some bad ones. Do not ever invest in anything unless you're prepared to lose the money that you're investing. Different development deals are going to try and sweeten the pot, because want you to work with them. So this particular developer, for example, has a different way of structuring the contract that you will be signing. There's one company last year that defaulted and a lot of investors lost their money. Now the problem was that the contract didn't stipulate or have any safety nets for the investor. With this development deal, for example, the investor has their name on the deed and the title of the land. Meaning, if something were to happen to the development deal, the builder walked away and they lost their money, I would still partially own this land that it's on. And eventually all this land will be developed, whether it's maybe 1 year, 5 years, 10 years. There's people always moving into populous areas that have opportunities and jobs. So I was actually expecting something more. I have learned to trust the people who advise me. This video is not meant to show you or convince you that development deals are something that should be part of your portfolio. They're just meant to show you that there's different ways that you can invest in real estate without actually owning real estate. This type of an investment would be great for somebody who either already has a lot of real estate in their portfolio, somebody who perhaps already maximized their credit and they can no longer qualify for additional real estate purchasing, somebody who is maybe reluctant to purchase a second home or a property and they want to start really slowly without having to hustle. I mean, this is about 30 seconds away. You can actually see that not only there's already people living in this area, but they're developing new townhomes right there. We're sort of just driving around the area and there is actually only a handful of homes. When I say a handful, I still mean maybe 200, which is a good sign. Okay. We're about 30 to 45 seconds, I think, south of where we were just walking. And this is a dead end of a road. Now you can see a lot of land over on that side, and you can see that this is the development site. Some unfinished townhomes over there, and a small pocket of, well, let me just show you the map here. So we are here. They're developing this side, and then these, I guess, are over there. To me, this is a really good sign because this is a very small community right now. There's a lot of land here that's eventually going to be purchased and developed, and the prices clearly are pretty low in this area, which means they're only going to rise up, especially when more and more developers come in and start building. When it comes to purchasing property, any real estate agent will tell you, you should have bought it yesterday. Real estate has always been and it will always be the safest investment you can possibly buy. If you're one of those people who wants to go and pay off their mortgage, that is amazing, and I hope you achieve that in the shortest amount of time possible. When you do, I urge you to consider refinancing and or pulling out the money from that mortgage so you can invest in other properties, because there's nothing worse than having money sitting in an asset. I've realized that real estate is simply the best investment and one of the safest investments that you can possibly do. You will definitely need to ride out the tough times with the ups and downs of the interest rates. Good thing about investing in real estate is that you can always pass on the increases on to the tenants, being the people who are renting. When the market goes up and the interests go up, people who are living in those properties are absorbing the costs. As long as you can ride out the market, you will be good and you will reap the benefits of the increased. Look at all this land here. That's all land that's going to be developed by a completely different developer. A really good sign. This deal may be profitable. Now, even if it's 50% of what they claim it is, it's still a better way to invest your money than having it sit in a bank, collecting 1%, 2%, 3% interest and let the bankers get your money. I hope you guys enjoyed this little tour. If you have any questions, feel free to ask me in the comments. If you're going to invest in any property, do your own due diligence. Never take out loans for investment. Never borrow money to invest. Hire the right lawyers. And remember, with any investment, whether it's real estate, whether it's mutual funds, whether it's stocks, anything, only invest the money that you can afford to lose. There is no fast and quick way to get rich. Trust me, there just isn't. Thank you so much for watching, and I'll see you guys on the next one. Marcin, out.